Welcome to your daily solo 401k webinar and Q&A session with my solo 401k financial, where we help you to stop overpaying taxes and start building real retirement wealth. Today's topic is how to transfer a former employer 401k at Fidelity Investments to a fully self-directed solo 401k plan. This is also your chance to get answers. Use the chat to ask questions on today's topic or anything else surrounding solo 401ks as well as self-directed IRAs. Go ahead and type them over now so that we can be sure to get to them all. Let's get started. I don't see any questions at the moment, but we'll monitor the chat for any questions. So, if you've previously worked for an employer and still have funds in a 401k plan held at Fidelity Investments, you may be able to transfer those funds into a fully self-directed solo 401k once you are self-employed. Moving funds into a self-directed solo 401k can significantly expand your investment options and provide additional features such as checkbook control, participant loans, the $1,500 auto contribution credit, as well as access to investing in alternative investments like real estate, precious metals, cryptocurrency, private equity, as well as stocks, exchange traded funds, and so forth. So today, we're going to explain how to transfer your former employer 401k held at Fidelity Investments into your solo 401k and what steps to follow to ensure the transaction is processed as a non-taxable trustee to trustee transfer, aka direct rollover. Okay, so why transfer a former employer 401k to a self-directed solo 401k? Well, many employer retirement plans restrict investments to a limited menu of mutual funds or target date funds. By transferring your account to a self-directed solo 401k, you can gain broader investment flexibility. A fully self-directed solo 401k, such as the plans offered through my solo 401k financial, allow many investments, such as stocks, exchange traded funds, real estate, cryptocurrency, promissory notes, private equity, tax liens, even life insurance. In addition, solo 401k plans offer several advantages compared to many employer plans. Let's talk about those advantages. So some of the advantages of a self-directed solo 401k is the participant loan feature, where the participant, and as a matter of fact, each participant can borrow up to $50,000 through a solo 401k participant loan. For example, if both spouses are self-employed in the same business, the solo 401k plan would be sponsored by that self-employed business. Both spouses can participate in the same solo 401k plan. They can each transfer their former employer 401k funds over from Fidelity, for example, and they would each be able to borrow 50% of their respective solo 401k balance up to a maximum of $50,000. Other advantages of the self-directed solo 401k are the Roth and mega backdoor Roth solo 401k capabilities. So with the solo 401k plan from a company like my solo 401k financial, for example, not only can you make Roth solo 401k contributions, but you can also perform the mega backdoor Roth solo 401k strategy by making voluntary after-tax solo 401k contributions and then immediately converting those funds to the Roth solo 401k or the Roth IRA. And each participant in the plan can perform their own separate mega backdoor Roth solo 401k conversion as well. And of course, a self-directed solo 401k allows you to place investments by writing a check or by wire, since you are the trustee of the solo 401k plan. Now, some important items to know before initiating the transfer of a former employer 401k held at Fidelity Investments to a solo 401k plan is that before requesting the transfer or direct rollover from Fidelity, you want to consider the following items. Number one, it needs to be a direct rollover. So the transfer must be processed as a direct rollover, also known as a trustee-to-trustee transfer. This way, it'll be a reportable movement of the funds on a Form 1099-R, which Fidelity will issue, but they will issue it by listing a code G as in George in box 7 of that Form 1099-R, which communicates to the Internal Revenue Service that the movement of that former employer 401k to the solo 401k was processed as a direct rollover. In other words, you did not deposit the check into your personal bank account and then turn around and deposit the check to the solo 401k, but instead, the check was made payable in the name of the solo 401k for your benefit as the trustee of the plan, and you then deposited that check directly into the solo 401k bank or brokerage accounts. So when it's processed as a direct rollover, the funds move directly from the former employer plan to the solo 401k plan. Now, separate checks for different fund sources. So if your former employer Fidelity 401k contains multiple types of funds, they must be transferred separately. Examples include pre-tax former employer 401k funds, Roth former employer 401k funds, and in some limited cases, and actually we're starting to see this more now, former employer voluntary after-tax funds. So each fund type must be issued a separate check and deposited into the corresponding solo 401k subaccount. Let me pull up a slide that reflects the various solo 401k subaccounts here. Let's see here. So here's an example of a solo 401k plan that holds various sources. Keep in mind, a solo 401k is a defined contribution plan, thus it requires its own separate holding account for each participant. So in this case, a solo 401k plan offered by my solo 401k financial allows for pre-tax solo 401k funds, Roth solo 401k funds, and voluntary after-tax solo 401k funds. So it's not three separate solo 401k plans. It's one plan, but you have separate holding accounts for each source of funds under the plan. And because you are required to track each source of funds, and that's done typically through separate bank or brokerage accounts. So this is an example of a one participant plan. Here's an example of a two participant plan. So a total of 6 holding accounts. And that's because, for example, if both spouses are self-employed in the same business, they both participate in the same solo 401k plan because the plan is sponsored by the self-employed business. However, each spouse is considered a participant in the plan, so they would each have separate participant accounts for each source of funds. Hence why this slide here reflects a total of 6 separate holding accounts, aka bank or brokerage accounts, all under the same solo 401k plan, because there are 2 participants, and each participant can make pre-tax contributions, Roth solo 401k contributions, and voluntary after-tax solo 401k contributions. So if you have a former employer 401k plan at Fidelity, and if that plan holds pre-tax 401k funds, as well as Roth 401k funds, then Fidelity would make out 2 checks payable to the same solo 401k plan, but a separate check for each source of funds. And you would then deposit those 2 checks directly into each of the pre-tax and the Roth holding accounts within the solo 401k plan. Let's get back to the prior slides here. Okay, so if you do not yet have these separate accounts set up under the solo 401k plan and you're a client of my solo 401k financial, we will assist you in opening these necessary brokerage accounts for each participant, including spouses, at Fidelity, or they can be open at Schwab or any other brokerage firm or even your local bank. Now, as far as prepping for the transfer of that former employer 401k to a self-directed solo 401k, you need to consider whether or not that former employer 401k has any outstanding 401k participant loans. That typically has to be resolved. So if your former employer 401k includes a participant loan, you must work with Fidelity in paying off that former employer loan, participant loan, before initiating the transfer of that former employer 401k to the solo 401k. Because if the loan is not repaid before the transfer, Fidelity is going to treat that outstanding balance as a loan distribution. And the balance will be reported as a taxable distribution to the IRS. So you want to make sure that if you have a former employer plan at Fidelity Investments that holds a 401k participant loan, before you transfer that former employer 401k, you need to make sure you pay off that former employer 401k participant loan. Otherwise, Fidelity is going to treat it as a taxable distribution. Let me now, when Fidelity treats that former employer 401k participant loan as a distribution, you can work with your CPA in treating that as a loan offset. We're not going to get into those loan offset rules right now, but in a nutshell, even though Fidelity would treat that as a taxable distribution, you're going to have until October 15 of the following year to come up with those funds and deposit those funds to an IRA or to a solo 401k. That is the funds to cover that loan distribution amount. That's typically what's called as a loan offset. But we've done webinars on that topic in the past, and maybe we'll do another one here in the future regarding those loan offset regulations. Okay, also, as far as other prepping before you transfer a former employer 401k at Fidelity Investments to a solo 401k is some of those investments held in that former employer plan will most likely need to be liquidated and move to the cash position, so the money market, before Fidelity can process the transfer. Because when Fidelity processes the transfer of that former employer 401k, they're going to make a check payable in the name of the solo 401k. So you would need to sell those investments so that they are liquid. Now let's talk about a step-by-step guide to transfer your former employer 401k at Fidelity Investments to a solo 401k plan, such as a self-directed solo 401k. The good news is that Fidelity Investments will allow you to call them to request that transfer. So you don't have to fill out any type of form. So typically you're going to want to call the phone number located on your former employer 401k account statement. And when you call Fidelity, you're going to explain to the representative that you want to process a non-taxable direct rollover from a former employer 401k to a solo 401k. Now, I often get the question, is there a way that this transfer can be done internally so that the funds never leave Fidelity and instead those funds get deposited directly from that former employer 401k plan to the non-prototype Fidelity brokerage accounts for a solo 401k offered by my solo 401k financial, where you're using Fidelity Investments to hold the funds? The answer is that Fidelity Investments will not allow you to move those funds internally directly from that former employer 401k to a non-prototype brokerage account at Fidelity Investments for a solo 401k offered by an outside provider like my solo 401k financial. It would be nice if they would allow for it, but they don't. So you have to follow Fidelity Investments procedures. So instead, they will send a check made payable in the name of the 401k. So in the name of the solo 401k. And when they ask the type of account that's going to be receiving the former employer 401k funds, you're going to explain to them that it's a qualified solo 401k plan and that it needs to be processed as a direct rollover. And then you're going to provide Fidelity Investments with the name of your solo 401k plan. If they ask for an account number, you're going to want to provide the employer identification number for the solo 401k. As far as how to make the check payable instructions, you're going to want to ask Fidelity Investments to make the check payable in the name of the solo 401k FBO, which stands for the benefit of, and then your name. So if your plan is called the ABC Consulting Solo 401k, the check, and your name is John Smith, the check would be made payable to ABC Consulting Solo 401k plan FBO John Smith. This ensures the rollover remains non-taxable because the check is made payable in the name of the 401k. If the check was solely made payable in your name, Fidelity would treat that as a distribution. By making it payable in the name of the 401k for your benefit as a trustee of the plan, that's considered a non-taxable direct rollover. And then you're going to request the check mailed to you. Since you are the trustee of the solo 401k, you request that Fidelity Investments mail the transfer check directly to your address. This will allow you to deposit the check into the appropriate solo 401k holding account. Subsequently, you're going to want to deposit that transfer check into the solo 401k. So once you receive the rollover check, you're going to want to verify that the payee name. So before depositing the check, confirm that it is made payable to the solo 401k plan for your benefit as a trustee, so not just to you personally. You're going to want to write the solo 401k brokerage account number in the memo line. So in the memo line of the check, then you need to endorse the check as the trustee. So since you are the trustee of the solo 401k, you sign the back of the check. For example, your name, comma, trustee, and then the name of your solo 401k plan. Then you're going to want to deposit that transfer check. So if multiple checks were issued, for example, pre-tax and Roth funds, deposit each check into the correct solo 401k subaccount. Example, pre-tax funds would get deposited to the pre-tax solo 401k subaccount. Roth funds would get deposited to the Roth solo 401k subaccount. Okay, let's keep going here. So for clients at my solo 401k financial, where we provide a fully self-directed solo 401k, which does allow for the transfer of former employer 401k funds, we will help you to open up the holding accounts for the new solo 401k plan. That's the various sub accounts, so pre-tax Roth and voluntary after tax. And then we'll also assist you with that transfer. We can always call Fidelity with you and request that transfer over the phone with you. And then if you have questions about how to deposit the check directly into the solo 401k holding accounts, we can provide further guidance as well. So final thoughts here. Transferring a former employer 401k from Fidelity into a fully self-directed solo 401k is generally a straightforward process when handled as a direct rollover, aka trusted to trustee transfer. The key steps include making sure that you call Fidelity Investments at the phone number listed on that former employer account statement, that you provide the proper solo 401k information, that you ensure that separate checks for different fund sources, aka Roth versus pre-tax solo 401k funds, are issued, and then making sure that you deposit each transfer check into the appropriate solo 401k subaccount. So when structured correctly, the rollover is, or the direct rollover is non-taxable and allows you to unlock the full investment flexibility and features of a self-directed solo 401k plan. Okay, I don't see any questions at the moment. I know it's a busy time of year. So that's it for today's session. Thank you so much for investing your time with us. We know your time is valuable, but we feel that your retirement future depends on it. If you haven't yet, please like and subscribe to our YouTube channel. Like us as well across the various social platforms, as this will help us to get the word out to other solopreneurs and self-directed IRA investors. We'll be back here again in a couple hours with the second session, so a second live session. Until next time, have a good rest of the day.